Well, less than a week till President Trump takes office and all eyes on the economy. After all, you could argue that is the number one reason that people elected President Trump this time. Bring down inflation, drive down interest rates, try to steady this economy. Inflation numbers are still through the roof. People are paying enormous prices for groceries across the country. The market seems to be in a bit of a spasm. We're seeing the market taking a big dump. Mortgage rates are on the rise. That's supposed to be going down now that the Fed has cut rates. Central banks buying up gold and silver like it's going out of style. What in the world is going on? Let's get a pulse of the economy right now. We'd like to check in with Kevin DeMerit, the CEO of Lear Capital, for a finger who's got his finger on the pulse of all of this, what's going on out there. Kevin, great to see you. Welcome back to the show.
Yeah, thanks for having me, Clayton.
It's a really interesting time. I mean, I think like the market right now is kind of spinning in its heels, waiting for President Trump to get in there. What sort of regulations will be cut? You know, what sort of free market forces will be unfurled for the first time in maybe 15 years? So where do you see things sitting right now? I mean, obviously you're knee deep, of course, in what deals people dealing with in gold and silver. On the investing side, where are you seeing things moving in the next couple of days, in the next week or so?
Well, most of the people we're talking to, kind of pointing at four specific things. One is just the geopolitical tensions. What's going to happen there, right? We've got conflicts in Eastern Europe. You've got Asia with China and Taiwan, not so much recently, and then you have this Israel situation. So what's going to take place there? You have, like you brought up, record central bank selling of dollars and then moving over and purchasing precious metals. So they're reducing their reliance on the US dollar. They're nervous about the debt levels, and they're really nervous about what I think is a big tipping point with $1 trillion of interest payments from the US government, which, if you add up, is higher than any other expense than we have. So for the first time in history, it's larger than defense, transportation, everything else. Interest on the debt is at a very high level. So I think a lot of these central banks are extremely nervous about the value of the dollar long term and selling off and moving over. They're also selling off, in my opinion, because of the possible tariffs and a trade war that could happen because of those tariffs. It could affect supply chains, increase inflation. So a lot of concern around that. And then lastly, just record debt levels on the government side that I don't know if they can really get under control, but also on the consumer side. We're seeing credit card debt at credit card default rates at 16-year highs. And people are not just using their credit cards to buy luxuries, they're using them to pay for groceries and gas. That's a problem. That's what we saw back prior to 2008. And here we go again. So, debt is a big problem. And again, I think it's a big tipping point with the US government having its largest expense being interest, because that's something you just can't cut.
Yeah, I don't know how they're going to I'll ask you how they'll put that genie back in the bottle if they can. We've had former Congressman Ron Paul, former presidential candidate Ron Paul, who I'm a huge fan of. He really thinks there's really no way out of this. I mean, with this massive amount of interest that we're paying, and of course he's not a big fan of tariffs either. So I'm curious where you see, once we get into this tariff war with Canada, Mexico, and Europe, et cetera, where do you think things are going to shake out for the United States consumer and just the everyday American?
Well, first of all, you look at these tariffs and are they the right thing to do? Probably. We've had a lot of free access from different countries to us, but no politicians kind of had the nuts to get out there and say, okay, I'm going to place tariffs back on your goods and services. Trump's going to do that. What are the ramifications of that? Probably, if I had to guess, some supply chain issues, because you're going to have some trade wars. There's not going to be enough of certain things like maybe chips and so on and so forth that everybody's been talking about. So prices are going to go up. You are going to get higher inflation. Not good for the national debt, because again, our interest rate on that is too high. It's probably not great for anybody with a credit card debt, because your interest rates are going to be high. So I think you're going to get this higher for longer interest rates, higher for longer inflation because of these tariffs. And then what happens to the dollar and really the value of the stock market and your retirement and everything that goes along with it? people have to pay attention at this particular time. Like I said, this $1 trillion in interest payments is a big tipping point because there's nothing you can do. But you can cut defense spending, but you can't cut the interest. That's a problem.
Yeah, I mean, it's unbelievable how much interest we're paying on this right now. And, I really feel bad for, it's not just about gas prices, which have gone down in a lot of areas right now. It is just the cost of goods. It's just the cost of being able to buy eggs and milk and groceries that have gone up over 20% for so many Americans in just about every category. I know it's asking you a lot to look into a crystal ball to see how tariffs maybe will drive down the cost of those goods. Do you think that we're going to see any immediate relief for average Americans in their wallet?
No, no. If you are going to place tariffs on products coming into the United States, you are going to have higher prices. I can't find any time in history where you place tariffs on countries and the price of anything went down. That isn't the way that it happens. If I put a tax on something, the price is going to go up. So again, is it the right thing to do? Yes. 2 years from now, maybe everybody gets together, or a year from now, maybe the countries get together and say, "Hey, look, I'm placing tariffs on you. You're placing tariffs on me. Let's get rid of the tariffs. Let's have an equal playing field." That would be where I believe Trump, hopefully, is where his thought is, and it's the right thing to do. I really believe that. In the immediate term, over the next 12 to 15 months, higher prices, 100%.
So really kind of like a leverage move here, because Europe, we talk about a massive hundreds of billions of dollars trade debt to Europe, where they have a trade surplus to the United States. I mean, upwards of $50 billion trade surplus. So yeah, they're shipping their goods to us. They're not accepting our goods. They're not putting stuff on their store shelves in Europe. And I said, this weekend I did a video where I highlighted just the lack of goods. You want to go into a store in Europe, try to find American products, you're not going to find it. You're just not going to find it. So there's a massive imbalance here. But I think, yeah, you're right about that. I think American consumers are probably going to feel the squeeze in the meantime until things get balanced out here. Let's talk about real estate a little bit. You're obviously a huge real estate fan, as am I. And I always talk about investing in tangible assets like gold and silver and real estate. Well, you're seeing mortgage rates going up. I thought we would have seen mortgage rates coming down because the Fed cut rates. The federal funds rate has dropped. Why are mortgage rates going up? How long do you think that's going to happen?
Well, when you have $1 trillion interest payment from the government, the market is going to dictate where those interest rates go, not the federal government. The federal government can lower interest rates now back to 2%, and I believe you're going to still have 5 or 6%, 7%, mortgage rates. And if the tariffs take place and you can't get the deficit under control, then interest rates are going to go higher and higher and higher because they're based on the 10-year or 20-year, government bond and whatever the spread is on that. So you're not going to get that interest down. That's why I'm saying this $1 trillion is really a tipping point. As soon as the interest is your biggest expense in the government, there's no backing away. Everybody that's listening has to start thinking about their retirement and interest and inflation higher for longer, right? Maybe they didn't believe it in the beginning, but everything that Trump is doing will drive interest rates probably higher for longer and inflation higher for longer. Now, when I say what he's doing, don't take it as a negative. I think the tariffs turn out to be, in 12 to 15 months, a good thing. And these imbalances that you were talking about will start to work their way out. He's going to try to lower the government spending by $2 trillion. Look, the government spends around $8 trillion now. You lower it by $2 trillion. Where do you lower it? Defense spending? Social programs,
right?
They're all tough choices. Is it the right thing to do? Yes, but are they tough choices? And is something going to happen on the other side? Sure, there's businesses that have contracts with the government that are going to lose those contracts. That's going to affect, the economy. 1/3 of government spending, 1/3 of the economy is based on government spending. You lower that by $2 trillion. That's 10% of the entire economy. You are going to have some pain. It's like you and I, if we had huge amounts of credit card debt and our interest was higher than anything else that we had, right? It was higher than our mortgage payment and so on and so forth. We need to do something, and we need to stop buying cars and stop buying clothes and maybe stop going out to eat. That pain for a year or two will come back and you lowered all of your your expenses, and you're back in a place that you should be. That pain that we're going to go through in the economy is the right thing to do. It's just
Yeah.
how much of it do you want to take and how long will it last? And people better get prepared. So you bring up real estate. Everything tangible right now is what I would be purchasing. Look, I can't build
Yeah.
any more real estate. We can't print gold. So if inflation is going to run a little bit higher for longer, the interest rate is going, or the interest on the government debt is going to be $1 trillion, and they're going to be printing up trillions of dollars to try to cover that. The value of the dollar is going down, and the price of real estate and tangibles like gold and silver are going to go much higher.
So gold and silver, last time you were here on the show talking about silver, we see this silver shortage right now. And of course, what Trump wants to do with the massive expansion here for, data centers and energy production and everything, all of it requires silver. And we have a silver shortage. Are you still as bullish on silver as you were?
Absolutely. I think it's one of the most undervalued assets out there. You have a supply deficit in silver larger than we've ever seen in the past 20 years. It's trading at a 40% discount to its all-time high of $49. And like you said, we're going to build more data centers. The green energy with solar is not slowing down. Silver's used in batteries for electric vehicles. So you've got all of these new uses for silver, yet you're running at a deficit and there's no solution to fill that deficit. So in my opinion, the silver price should be in the $35, $37 range, and we're at $29 today. Very undervalued.
Yeah, Natalie and I, of course, huge. We just bought a lot of gold and a lot of silver, and we usually split it up about. Last time we purchased silver, we did about 70% silver, 30% gold. So, that's kind of the balance of what we're looking at right now because it's relatively inexpensive, comparatively speaking. If people want to reach out to you guys do an amazing job over at Lear Capital. If anyone wants to speak with you guys about purchasing a little bit of silver, a little bit of gold as a tangible asset right now, we have the phone number here on the screen. You guys have been great for our viewers. 1-800-613-3557, or they can just go to learredacted.com and talk to you guys. Any final thoughts here? I mean, this is a big week. Got a few days till Trump takes office. What do you think we're going to see sort of maybe in the first few weeks of the Trump presidency? What do you expect to see from your clients? You have people calling you. What are they most concerned about right now?
Well, they're most concerned about really a lot of the things we were talking about: the interest rate, the debt on the government side, the debt on consumer side, because it has such an effect on the stock market and their retirement, and then what's going to happen with these tariffs, and what does that really mean to inflation and interest rates? And really what we did, look, we don't have enough time. We could spend 4 hours talking about all of this stuff. So we put a big special report together for 2025, talking about debt, talking about interest rates, inflation, and the tariffs. Our best guess on, three scenarios on tariffs, and we'll just give that away for free. I think that's the place people should start, is just try to educate themselves and see maybe a different perspective. And then if you believe in that perspective, you can move forward and purchase some gold and silver. But I think getting everybody educated, in our opinion, is the first great place to start. You do a great job on your program, and we'll try to expand on that a little bit with our special report.
Well, I was talking to a buddy the other day where there's no financial literacy in the United States. Schools don't teach it. They barely even teach you to balance a checkbook. So they really do not want you educated on finances. They don't want you to understand that buying real estate, buying tangible assets is a way to protect yourself, a hedge against inflation. They hope that you go out there and go into consumer debt, get credit cards. They really prey on people right now. So, educate yourself. Kevin, great to see you. Stay safe. I know you're in Los Angeles there. How are you dealing with all the fires right now? I know you've been in the line of it.
Yeah, look, I'm extremely fortunate. My house is standing. What is there, 2,500 structures now that have been burned? It seems like everybody in the city knows somebody whose house is burned down. It's unbelievable, the incompetence of the people in charge here in California. I mean, this is not enough water, cutting the budget on the fire department. So hopefully we can get some competent people in here and really help out. But thoughts and prayers out to the people who have lost their houses and lives.
Yeah, especially with these winds hitting 100 miles an hour as you and I are speaking right now. So stay safe, Kevin. Great to see you. Thanks, as always, for checking in on this economy and the updates there. We appreciate it.
Yeah. Thanks, Clayton.